Welcome to the Pirls Stock Market Commentary video, your weekly window on stock market technical conditions, featuring the proprietary bull-bear point and figure market breadth summary chart for August 13th, 2017. Market breadth. With this past week's market decline, our bull-bear point and figure ratio at 0.72 fell from 1.15 last week and is now in bearish territory. The total count of securities in bullish or bearish patterns increased 6% to 3,108. The count of bearish stocks increased 32%, while the count of stocks in bullish patterns decreased 17%. The Pirls PNF market breadth summary chart shows us a market now 1 week in bearish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, by clicking Membership, clicking Register, and following the prompts. To subscribe to the weekly Pirls Stock Market Commentary via email, free of charge, simply enter your email address in the space provided and click Subscribe. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 180 points for the sixth decline in 16 weeks. At a negative 95.87 points, it continues below the 6 tops above plus 100, and it continues above all 4 bottoms below minus 100 in the last 3 years. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in neither accumulation nor distribution mode, with average daily volume lower than the prior week. In the last 2 weeks, the Nasdaq had 0 accumulation days and 6 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in neither accumulation nor distribution mode on lower average daily volume. Momentum. In a Woody's uptrend since Wednesday 7/19 close, the CCI 20 daily is now at a negative 225.46, down from a positive 13.91 last week. The CCI 20 daily has 3 days below 0 and is outside the plus or minus 50 range for another 0 line reject long entry signal. In Woody's CCI trading system, 6 consecutive bars above or below 0 are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 67 weeks ago, while the daily CCI 20 began a Woody's uptrend 3 weeks ago. The CCI 20 weekly has fallen to a positive 77.64, down from a positive 109.37 last week. We await the return of the CCI 20 weekly to the plus or minus 50 range for another indicated CCI 20 0 line reject weekly simulated trade. Industry rotation, the last 2 weeks. 2 of the top 5 industries are positive, and all of the bottom 5 are negative. Summary: some tech and gold and silver on top, some tech and oil services on the bottom. Bullish: comp tech and disk drives have entered the top 5. Oil services leads the bottom 5. Oil has left the top 5. Bearish: computer hardware has entered the bottom 5. Brokers, KBW Bank, and S&P Retail have left the top 5. Gold and silver has re-entered the top 5. Focus this week from www.moneymetals.com. Is the Yellen Fed planning to sabotage Trump's presidency? By Stephen Gleason. The following are some key points. The Federal Reserve can make or break a president. Monetary policy influences all financial markets, as well as the cycles in the economy. No president wants to have to run for re-election when the stock market and economy are turning down. On the campaign trail in 2016, Donald Trump complained that Fed Chair Janet Yellen was trying to help Hillary Clinton by keeping rates near zero and pumping up the stock market with liquidity. Later that month, in the second presidential debate, he declared, quote, "We are in a big, fat, ugly bubble. The only thing that looks good is the stock market. But if you raise interest rates even a little bit, that's going to come crashing down." End quote. The president has warmed up to Yellen's Dow-friendly, easy money policies. He even suggested he might reappoint her to the Federal Reserve in early 2018. Yellen is a liberal Democrat appointed by President Obama. She understands what's at stake in the upcoming elections. She understands that Democrats are in a state of political desperation right now. President Trump now has the opportunity to reshape the Fed. 3 of the 7 positions on the Federal Reserve Board remain vacant. Trump can fill them. More importantly, he can replace Yellen as Fed chair next year. President Trump shouldn't underestimate the risks of the bubble he identified in 2016 bursting in time for the elections in 2018. In recent years, GOP reformers in Congress have pushed bills that would force the Fed to adhere to a rules-based formula for setting its target interest rate. That would help remove political conflicts of interest from policy decisions and make them less impactful on markets. Right now, any major monetary reform efforts would be met with insurmountable resistance by the keepers of the center-left status quo in the U.S. Senate. Yes, despite Republicans having a nominal majority in the Senate, conservatives are in the minority. That became abundantly clear when a pair of liberal Republicans joined anti-Trump establishmentarian John McCain in voting to save Obamacare from being repealed. It's likely that none of Trump's legislative priorities, from health care to immigration to taxes, will ever make it to his desk to become law, unless conservative, libertarian-leaning Republicans hold on to the House and gain some Senate seats in 2018. Democrats must defend 25 Senate seats in 2018, while Republicans only have to put 9 on the line. GOP strategists see an opportunity to expand their majority by knocking off vulnerable Democrat incumbents in Indiana, Missouri, Montana, North Dakota, and West Virginia, states that swung heavily for Trump in 2016. The question is, will the economic backdrop be favorable for Republicans to campaign on the Trump agenda? That remains to be seen. Given the stakes, Donald Trump's hiring decisions at the Fed could make or break his presidency. Thank you for watching this week's Sand to Pirls Stock Market Commentary video featuring the proprietary Bull Bear Point and Figure Market Breadth Summary Chart compiled by Donald Pirl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant weekend, that you are looking forward to a prosperous and productive week coming up, and wishing you true success.